Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, October 21st, 2025. It is 9:47 a.m. Eastern Time, and I'm starting the video, so we're just kicking off the trading day, and what I wanted to do is just go over some of the recent comments and kind of share my thoughts on some things. So in this, we'll probably just keep this limited to the stock market and the precious metals and miners. I'm going to start out here with this question. Time permitting, I'll get into some of the other ones. So somebody made this. I replied to this post this morning from Alan. Said I got stopped out with this bounce. Should have known better. Prices were. Yeah, I saw something about the bearish engulfing candle, and so what I did is I replied, and I was kind of skimming comments this morning. I thought they were he was referring to the indexes. However, I also did highlight, and I remembered we had some bearish engulfings on the metals as well. So I'm going to talk on both right now, but I'm just going to go over that and show you guys something. This is, to me, very important in my trading. I always say there's not any one single indicator that's 100% effective or anywhere close. If it was, we would all be sipping a pina colada on our private island out in the middle somewhere, because we just set our, whatever automated trading program to take those signals, take it every time it fires, and then you'd just be printing money, right? So that's a given. There's nothing even remotely close to 100%. But the bearish engulfings, as I often point them out, they're far from 100% effective, but they are one of my favorite trading strategies. And the thing is, I'll rate all types of things, sell signals, buy signals. If I give it a scale, let's just say 10 is the highest on a scale 1 to 10. There's two components that go into that. And number one would be simplicity, and the other two, effectiveness. So simplicity and then effectiveness, or how much profit potential is in that thing. So I have to give the bearish engulfings a 10 because it can't get any more simple. They're super easy to recognize. You can't miss them if you know what to look for. Again, it's just so you understand the definition of it. It's the body of a candle, the fat part has to engulf the body of the previous candle, not the skinny part, just the body. So that's by definition. So if you had a little one down there, that body right here is engulfing the entire body right here of that candle. Super easy to look for. And then effectiveness or profitability, however you want to say it, they're very simple. Is you take it when you see it, set a stop above the top of it, and you can do somewhat. I'm going to talk on that in a little bit. That's what I said on this one, on the indexes, and you can do the same thing on the metals. Somewhat above, and somewhat's relative to the scope of the move. So we'll get into that in a little bit, but not, because if you put a stop right there, the powers that be, the nefarious forces, these trading desks with billions of dollars of money, the old market makers of yesteryear, if they're still around, algos, computerized trading programs, they know where the stops are. If any of you have ever wondered for a second why a few years ago all these brokers all of a sudden stopped charging commissions on trades, I pay commissions. I have an option at Interactive Brokers, either go free trades on stocks or pay a commission, but then they don't sell my data. That's what Schwab, E-Trade, all these brokers, Fidelity, they're selling your information to the exchanges. They see where they know, and stops are there anyways, unless you hide your stops. It's something you can do on an advanced trading platform. I'll always hide it depends on the security, but I'll usually hide the stops. And that means they don't send them to exchange until the stop price is triggered. Then my broker will send that order off. That way, again, those nefarious forces can't see that stop sitting out there and try to rate it. So again, I always try to envision where are all the stops going to be, and then you want to set your stop loss a little bit out of range, because once they pop the stops, that creates buying pressure. It's going to run it up. Again, I'm talking on a short trade, and it's opposite and reverse. Everything is, as you know, inverse when you're trading long. And so effectiveness, now bearish engulfing candles are potential bottoming, or bullish. Again, I went on to say, I've highlighted many times, I very much look out for bullish engulfing candles and bearish engulfing. So bullish engulfing candles mark a bottom, bearish mark a top, right? Same thing in reverse. And let me just read my reply, and then I'll go on to show you some examples. So when a security, which is a stock, a sector, an index, like the S&P 500, a commodity, etc., when they print a bullish or bearish engulfing candlestick around the right time, and I put that in parentheses, this is critical. You don't just look for them in short or go long every bullish or bearish. They are topping and bottoming sticks. So you only want to look for them after an extended uptrend or downtrend, and ideally, very much ideally, with additional supporting evidence, i.e. overbought, extreme overbought conditions, extreme bullish or bearish sentiment, positive or negative divergences. The more supporting conditions that you have, the higher your degree of confidence is. So if those conditions come around the right time, like I said, the precious metals recently, the stock market, I'll usually take it on face value as a potential bottoming topping stick. But again, they're far from the holy grail of buy and sell signals. And I went on to say, while we've certainly seen a decent amount, not a lot, but several bearish engulfing candles on the daily or weekly charts of the major stock indices in recent years, some of them marking significant tops followed by major corrections or bear markets, and some that didn't. Okay, so again, it's not 100%, but we haven't seen a lot of them. And also keep in mind, I'll try to expand on this, time frames are very important here. You're going to get a lot more on the intraday charts, like the 60-minute charts and things like that. And I don't think I rarely highlight them there. I usually look for them for a trend reversal on the daily or the weekly. And every time frame, every time I step down from an intraday to the next longest period, from a 15-minute or 30-minute chart out to a 60, then the daily, for swing and trend trading, the time frame is more significant the longer you go out. In other words, I'm going to put a whole lot more weighting on a bearish engulfing on the daily than I am on the 60-minute chart. Even better, if I'm looking for a major top or bottom, if I see it on the weekly, even better, much better. Okay, so keep that in mind. All right. So I went on to say, however, the risk reward on shorting a bullish or bearish engulfing candle with stops not far above it is nothing short of phenomenal, as if they mark a major top or bottom. The loss potential is dwarfed by the profit potential. So again, very simple. You're going to lose typically a couple percentage points to make 20, 30, 40, 50% or more if you call the top or bottom on something. Whether it's the market, individual stock, again, everything. I can't quantify that number because every security is different. You call bottom on natural gas or certain Bitcoin, you're talking 100+% on the rally and 50+% on, if it's a bear market. Everything's different. Treasury bonds aren't going to move as much. So again, but again, it's all relative to one another. You're going to have smaller stops on something like treasuries than you would on Bitcoin, because the bearish engulfing is going to be a lot bigger. All right, so here's an example, guys, and this is just one of many. I've seen this many times. So QQQ put in a bearish engulfing candle on the weekly chart back on the week ending December 20th, 2024. And although that didn't mark the exact top, if somebody shorted and set their stop somewhat above that top, again, somewhat, give it a little bit of room, because again, you're usually going to see these. The reason I didn't invent candlestick charting. The Japanese did this, I think it was thousands of years ago. It's like over 1,000 years ago. It goes way back, the history of candlestick charting, long, long before I was around. And hold on, I just had a price alert on SOUN. Let me check that. Yeah, sound down. Just checking my alerts. All right, it's on the line right now. I'm going to tighten that line up and move it down here. Give it a little bit more room. The alert should still be there, but just in case. It's what I'm watching. All right, so I'm not going to pull the trigger on that just yet, but just wanted to share it for you guys that big AI stock. And all right, let me get back to what I was doing, and we'll move on here. There is very much a point to all this. So, all right, back on the week ending December 20th, 2024, we put a bearish engulfing candle. It didn't mark the exact top, but it was pretty much within, we're talking percentage or even basis points, just a couple percentage points. So if someone shorted, then set their stop somewhat above. QQQ went on to put in another weekly bearish engulfing candle, or bearish engulfing on the weekly, on the week ending February 21st. So what is that? Exactly 2 months later. And that did mark the top of in the start of that 26% drop. So here's a chart I posted. Again, it's in the comment section. You can check it out. There's your first bearish. You can see it's almost immeasurable, but it's a marginal, meaning ever so slightly. So if you had your stops a little bit above it, you never got stopped out. Or let's just say you say, I'm going to, I'm a doubt around, see the big drop you see coming, but I'll go ahead and take it. And you put a very tight stop. Well, okay, worst case scenario, you lost 1% or 2, whatever it was to the top of that, you were stopped out. And then we had another one there, and you got in, and again, that was followed by a 26% drop. Remember, Trump, we were short there for all those reasons. Trump didn't step to the podium on liquidation day, what he called liberation day, until about right here in the midway down in there. And that's where I gave you a lights out level in the market that day, right before he stepped up. Said, if we take this level, it's lights out for the market, and that's what happened. And then just a couple weeks later, when the world was panicking, we covered those shorts, said cover all shorts, go hard long for the reasons stated. So we milked that down with impunity. And now let me show you here. This is the first one. So on 1220, again, I highlighted this. Guys, this is my job. I don't trade for you. I don't take your trades. I don't enter your trades. I don't tell you what to trade. I provide analysis. And I'm going to highlight these things, whether they're going to pan out or not. It's up to you to decide whether you want to take it. But I just want to point out that I did highlight it then. We had a bearish engulfing candle. And I went on and I cover in the videos a strategy all the time. This was a daily chart I posted below, but on the weekly, I made clear it was a weekly because that was the end of the week. We printed the bearish on the weekly. We already had some sell signals on the shorter term time frames. And then like now, I said, made the case to be short, although nothing aggressive. And then I gave you when the next sell signal would come there. So that was 1224. Fast forward exactly 2 months. End of day, weekend was coming up. And I made sure to get out to you that, hey, we did it again. And so it was an ever so slightly marginal new high, as I just showed you in the market. And I wanted to make clear, but this one was even better. We had multiple bearish engulfings on multiple indexes. The S&P 500, the Nasdaq 100, the equal-weighted Nasdaq 100, VTI, which is the best thing, the single best ETF to track the entire stock market, small caps, mid caps, micro caps, large caps, all of it. The whole market's covered in this one ETF. It's more indicative of or representative than the S&P 500, which are only mega cap, large cap stocks. The Russell 3000, also a very diversified, probably the second best, closest thing to the entire stock market, right behind VTI. And then IWB, which is the Russell 1000. So here's my point is, okay, and they may not have worked out, but they did. And again, so you made 26% or a good part of it if you were short these and you wrote it down to that it was time to cover after everybody was panicking from Trump's tariffs. And that's where we're at today. So let's now talk on the indexes. Let me go back to QQQ, which again, I'll get to the metals. I think after I read that, I realized that might have been because I was just catching up on comments. He might have been referring to the metals. So here's QQQ. Here's the weekly. There's our bearish engulfing, still intact, the very top of the candles. I covered yesterday. We came close to testing the highs, but we didn't. The high right here, I'll put a little horizontal line. And there's the high of last week's, or the candle from That's on the daily chart. Remember, we put those bearish engulfings both. They were so big on the daily. It also gave us one on the weekly, and we're still below it. And again, marginal new high. Your stop is going to be where you want. You can have it exactly a penny over that if you want. Powers that be might want to try to run that. And listen, they could run it, break out, and keep running. So how far you put it, you can go back to 2024, early 2025 and measure. And again, it was probably, like I said, within 1% or so. It was an almost equal high. You can see it here on the daily chart. So I just wanted to state that those are intact. And if we do pop it, based on my read on the markets, both the technicals and the fundamentals on the economy right now, where we're going, my guess is any highs in the market are going to be limited. I told you before, I cannot dismiss the blow off top scenario. I would be a fool to say that cannot happen or will not happen. Anybody that tells you the market must or won't do anything, run, don't walk away from that listening to that person. Anything's possible. I just don't think it's the most likely scenario, right? And again, that's what stops are for. I promise you this, if the market's going to have a 20, 30% blow off top from here, I'm not riding that fucker out short. You take my words on that. But for the time being, like I said, I have some short positioning. My expectation is this is has a good potential to be, if not the top, at least another tradable top. Take a 20+% drop all day long, and that's a top. That's a correction. It's technically a bear market if you're using the old 20%. Definition, 20% drop off the highs. All right, so let's move on. So that's it. And again, you do you, I'll do me. I'm going to highlight these all day long. Like I said, we're coming close to running it, test those highs, but we haven't taken it out. And if we do, that's why I like to say leave a little bit of room. And, if they do pop the new high soon, like I said, the next resistance, because when you're at all-time highs, there aren't any resistance levels because you've never traded price there before. Price has never been. But what you would have is a back test of the trend line, and you can kind of eyeball it and see where that's going to take you. So let's move on. Let's talk the metals now, because that's where I think there's potential, a lot of opportunity. So we'll go back to gold, start there. We'll look at the main ones. This is the trade I gave you the other day. I've been waiting forever and a day, and we still haven't broken this trend line here, which now is just a pullback target, which there was the breakdown, the sell signal yesterday I highlighted on the kickback rally. If you booked profits at T1, and remember, this is the most crowded trade in recent years. The metals, and everybody that I haven't been able to find anyone bearish on the metals. Even the bearish calls I hear are just bulls acknowledging we're going to get a correction soon, or the odds maybe we get a correction. They're just looking to buy a dip, and because of that, that's extreme one-sided sentiment. I'm very open to the fact it could mark a much more significant top, followed by a lot bigger correction. That's why you have these potential targets here. I'm just kind of reading the tape, feeling it out. Just wanted to mention that. So, you made a quick, and again, you're going to get more juice in silver and GDX. I've told you that many times. So it's not a huge trade. But if you trade gold futures, I leverage up gold more. You beta adjust it up a higher position than you do silver and GDX. So it was a 2% drop from the 2.2. So, you could have easily twice the position that you would in GDX or silver. So that's really about a 4.5% drop. And then we kicked back yesterday. If you took profits, I highlighted another objective reentry. We went up a hair more from there, and now we dropped even more. So this is profit taken. We're at support right here. My first target, which was hit, we're there again. And if and when that goes, and we go down to T2, and I'll decide. Now, if we break T2, you're also breaking the uptrend line right there. That's the uptrend line, same one I've been looking at here on the daily chart, waiting for a break there, a more powerful sell signal in gold. There was the bearish engulfing on the daily. There's an example of a little stop pop that those that got stopped out on, running a stop too tight are regretting it now. From there, gold's dropped 4.5%. And then you go to the, again, what I consider a much more significant chart. This is a weekly chart. Let's see how we finish the week. The week is very young. Gold has, from this chart on the weekly, there's no violations. This trend line is still very much intact. The divergences, I'm just going to take this line off now. On blow off tops, you usually burn through divergences. I need to add that. That's very important to note, that once you go vertical on anything, usually any divergences get taken out. And as I often said, parabolic trends, from my experience and years, decades of experience, hardly ever end well. They usually, you end up crashing down just as quick as that final ascent was on the way up. So all I'm telling you is I'm watching this. Gold's the leader. So far, the week is young. Nothing, they could gobble this up, turn this candle green by the end of the week, but I'll be very much watching this for a sign to either, and again, during the week, I may close out, bounce, I'm micromanage trades, bounce off support, game bounces. But at the end of the week, if we print a big, fat, bearish engulfing on the weekly, especially if it closes down below this trend line, that's a pretty powerful sell signal, potential topping stick. We haven't seen anything in gold like that since, I don't know, I can scroll back maybe on that last bull market blow off top there. However, let's go to silver and the GDX. So let me move that divergence line. Right now, big fat bearish. Remember, you don't have to engulf. It's a part of a bearish engulfing. By definition, it just needs to engulf the body of the previous candle. So unless, the only way this bearish engulfing gets undone, because the week is young, right here is where we're at right now at the bottom of it. See 44.20. So if silver, if the dip buyers come in, believe me, it's been a voracious bid, but it's also been indicative of a blow off top. Volume confirming, parabolic rise. Right now, they would have to, by Friday, close up or above the body of that candle right there to undo this current bearish engulfing. And that's be about up to about a little above $47. Let me measure it in percentage terms. We'd have to rally about 6.5% or so. And that silver can do that in a blink of an eye. It can do that in a day. It's down 7% right now, 7.38. But I just wanted to point out, there it is, bearish engulfing candle. So take the strategy, stop somewhat above, somewhat again is going to be relative to where you think it's going. On this weekly chart, I don't see anything coming into play as far as support goes until we hit this trend line. So that's going to be, if you took the recent sell signals, that's going to be a profit of about 17% or so on silver, give or take, when it gets there. GDX too, I told you the miners would crater hard, a lot harder than gold. Clear bearish engulfing. And here's an example, guys, just like I just showed you from the stock market back in end of 2024, into December. And then 2 months later, it put in a bearish engulfing here. But what happened then, we didn't take out the trend line, right? We had a bearish engulfing, but we followed up next week. They popped it. Now we have another bearish engulfing. So again, my point is, guys, I'll take these 100 times out of 100. And if I get stopped out 80% of the time, let's just say, I'm getting stopped out for a tiny loss. And if the other 20% play out, my profit potential is going to be usually in a magnitude of 10 or greater, multiple of 10 or greater of the stop. So I'm going to actually make money on that strategy. So I just wanted to share with you why I talk about these, and that's it. So and here's an example one. This wasn't really after a prolonged uptrend here. This one came, there's a bearish engulfing right there, but it came after a breakout on GDX. GDX had just broken out, was in this sloppy trading range. This is not when you don't look for topping sticks here. Ignore them. You're going to get them. You're going to get bearish engulfings. Sometimes they'll play out. There was one right there. But again, you want to look for them after an extended uptrend. The more conditions you have, the better. And that's excessive bullishness or bearishness on the way down. I've pointed out plenty of bullish engulfing candles on the markets and other things over the years. And when something's pushing all-time highs and in a parabolic uptrend and extreme bullishness, I'm going to look for those bearish engulfings. I'm not going to be talking about bullish engulfing candles. I will on other things, when we're bottom picking. So that's what GDX looks like on the weekly. Again, right now, bearish engulfing in the works. The week is still very young. Let me repeat that. The week is extremely young. It is Tuesday morning. We're not even an hour into the trading day. A lot can and will, I promise you that, a lot can and will happen between right now as I'm speaking and 4 p.m. Friday this week when these weekly candles are finalized. But we have the reasons we're currently short is not on the weekly chart. It's on the 60-minute charts, everything I've given you. And here's GDX on the daily, having clearly taken out the uptrend line right here off the August lows. And coming up on that, I guess I gave you, yes, I did. I gave you, for typical swing traders that don't want to, try to game all these little zigzags. This is what I like to do as an active trader. Short, hit my first target, game a little bounce. I got out to yesterday where it was time to, if you took profits, make an extra few percentage. So you can turn in what's going to be, if I'm right, to T4, that's a 21% drop. You can easily turn that into 30-40% of profits by gaming the bounces when appropriate. So here we are. T2 is now hit. Took that out today. Miners are down. And T3 is the next stop. And the last thing, I don't want to beat a dead horse here, but I just want to reiterate, do not underestimate how fast and furious something can fall when you have such a lopsided trade. Shorts have long left the building on this one. They've been blown out, and rightfully so. I mean, Jesus, I can't imagine anyone that's been short this whole move. And so when there's no short sellers to cover, that's when you tend to blast right on through support levels where they normally would step in and buy to cover their short take profits. And so we'll watch it. And then it's going to also show me in real time, if and as this trade continues to pan out, it'll show me how many more buyers are behind. Like the stock market's a good example. We had some really powerful sell signals Friday before last, but they came in and there was still a voracious bid, and so far they gobbled it up. Now they didn't take it back above the recent highs, but close to it. And so I'll give it prop. It just tells me it's kind of like a little check, a little test on the market. And well, there's still quite a bit of cash on the sidelines. At some point that just ends. And again, we can guess all day long. It just tells me right now is not on the metals or the market time to be aggressively all in short. But it is still, those sell signals on the market and the metals are still intact. So it tells me to, in those assets, have a short exposure right now. And then just to give you some potential longer term targets on GDX, let's say, or let me just show you some things on the technicals. Besides the fact that, again, I've been reading, if I turn the TV on, which is rare, listening to folks, and it's hard to find a true bear in the metals right now. Anyone that doesn't think the price targets, just like the stock market, and guys, I've done this a long time. Any asset, whether it's the stock market, no matter how big the bubble is, whether it's gold, whether it's Bitcoin, new highs, the analysts come out of the woodwork and then start projecting their targets higher and higher and higher, and that's usually what happens. So all I can tell you definitively, this is the most overbought on a weekly. This is a weekly chart, weekly time frame on GDX. It's been in many, many years. We were not even nearly as overbought right here, and I'm going to measure it for you just to tell you how big the drop was. If you bought into that right there, and it was a more constructive chart, we'd just broken out, 47%. You lost half your money if you bought into the highs on that overbought reading again, which was almost to the same point. You can see right here, the red line's the 70 level on the RSI. Roll back, there was an extreme overbought reading, and that was after a very bullish breakout right there in 2016. And it still was followed by what I imagine is a good 50% or so drop from there. So that's all I can tell you based on the technicals. Now, the thing about overbought is it can and often does become more overbought. If you look really closely at that one, you had the first peak there, and we were only halfway through that rally. Then it became almost an equal, slightly lower reading there. So there's a period, and it wasn't very long, but if you shorted just because you were overbought there, you lost your ass on it, and you most likely got stopped out. So, like I said, overbought can become more overbought, meaning it can go higher than the, 80, 90, whatever. What was the RSI? I haven't seen the RSI like this on silver. On a weekly, that was 80 to over 82 right there. But again, overbought usually tells you the gains are likely limited at that point. The other things I told you I was looking for on gold was bearish PPO crossover. We also had that on GDX recently. We just got it on gold. What else? That's it. Let me get the video out to you guys. You could watch it. Kid. So I'm just trying to paint the bigger picture on those bearish engulfings, what to watch for on the metals, the market, and again, I thought it was relevant to show you because those were fresh. The last top we had back in the end of 2024, early 2025, and the Nasdaq with that being slightly higher. But again, the great example of two bearish engulfings. The first one didn't do the trick. The second one, which was a hair higher than the 1-2 months earlier, did the trick. And so, and again, I might point out 5 more on the markets before one of them sticks. And if I do, and I take each one of them, position for it, and it's a swing position in my longer term accounts, which is what I do on those as well as my active trading account. I may lose a couple percentage points and then finally get the right one, and I may hit that 50-55% longer term trend target I have on the Nasdaq 100 downside target, that is. There's silver futures. All right, guys, I'm going to wrap the video up here. This has been Randy Finney with Right Side of the Chart. Have a great day.